Yeah, I'm losing my edge.
Today, Pete, we are going to talk about trading technology against stocks, and that isn't the most perfect title because technology stocks are stocks, but for all intents and purposes, we're viewing technology here in 2020 as being kind of its own market.
Right.
Technology stocks, whether you're talking about semiconductors, biotechs, all these different companies and public stocks that we trade here on the open market, they do have a high correlation that we're going to get into to your Dow Joneses and your S&P 500s and all of that. Positive correlation, but very different day-to-day life. And that's why we created our own technology index that, the S&P 500, it's like 25% technology. The NASDAQ, it's 50% technology. The Dow Jones, it's like 10 or 11% technology. And we said to ourselves, why are we meddling with these stock indices that are a good chunk technology, but also have these other moving parts? Let's give you a technology product that you can trade against the rest of the stock market. That's what we did here at the Small Exchange with STIX, Small Technology 60. And we have, thankfully, SM75, the Small Stock 75 index, which kind of serves as your S&P or your Dow or your Russell, basically not technology in my mind.
Yeah, absolutely, Frankie. And that's what's nice is, what you're looking for. And we went back to the bench and we had the opportunity to build innovative products. And we were like, we just don't want to make tiny bits of somebody else's stuff. They're free to do that. We wanted to put together something we found interesting as traders and something that stood on its own. It's really kind of the next evolution of product. And I think this has worked so well for so many reasons. We go back to those anchor tenants, and you and I have reinforced this so much about small, standard, and simple, and the dollar tick and the easy conversion for a pairs trade. But you still need the interesting part of the trade. And I think this is what we've really accomplished with these pieces. And it creates, I think one of the challenges with futures, there's so many. We were constrained in an institutional world, and you had to pick a side. You had to be long or short. So, and pairs trades, we found were interesting ways to lower our movement and give us time, but they, in and of themselves, became very expensive because of the margining aspect. So here we've addressed a lot of those issues and given ourselves a pairs trade that fits not only in movement, but in cost and simplicity and opportunity. Because, once you start getting it and looking at these, it becomes, all these levels start to become second nature. And it's still you and I, after cumulatively 50 years of trading experience, when we look at these moves and things like NASDAQ and SPOOs, and we see the percentage difference, we can't necessarily say that dollar difference made that spread up or down, and we have to take a pause.
Absolutely. No, yeah, I'm glad that you brought up the pairs trading because that is how you do trade technology against stocks. And I'm glad that you brought up some of those pitfalls because with the creation of SM75 and STIX in the last few months here, we don't even think about those problems anymore. Margin, I haven't even thought about that problem since the creation of small exchange products because, Pete, you're totally right. You used to try to trade S&P futures against NASDAQ futures, and that's a trade that today using the E-minis will cost you 20, 30 grand to put that trade on. You go to the micros, that's still costing you, 5 to 10 grand. Here, you look at STIX and SM75, that's a margin that might get you over $1,000 to put that pairs trade on there. If not, it's right around there, maybe just under it. I don't even think about that problem anymore. And the simplicity of these products here, you see, we created this tech product so that it still had a positive correlation with SM75, S&P 500, Dow Jones. 0.8, that's great. That's what you need to be pairs trading things. You need the crossover here. Oh, they both have Apple, they both have Amazon, they both have Google, Microsoft, Uber, and Wayfair. You need that, that relationship that they tend to act like each other. But you also, Pete, need this, which is a difference here. They move in the same direction, but their performance can be very, very different. We see here in 2020 a difference of about 30% of performance between technology and the stock market at large here, this is the opportunity that we're looking at, going from, okay, we covered the correlation piece. We covered the crossover piece. The margin isn't too high to get this thing on. We know that we want to be buying one and selling the other. Now, what side do I want to be on and why? And here, you and I have been playing a lot of the back and forth between, okay, you remember this here at the end of August, start of September, technology took off on top of the stock market at large that was kind of flat for this little area. Look at selling it and buying this SM75, and you saw the reversion of the technology stocks with a minimal reversion of the SM75. We got in a lot on the short, expensive market, long, cheap market, and I'm looking right now to do pretty much the same thing in terms of a longer term trade, short sticks, long SM75.
Yeah, I think, and what's nice is, what the context here is, you can really see, this divergence. And, we tried this a little bit early, and I still think, you look at that two-sided action of not only the underlyings, but the spreads, anything you can do to add, another opportunity and add it simply. It's so empowering. I think you and I have worked together. It's for almost 3 years now, I think. And
it's more than that. We've worked together for like 4 or 5 years.
Yeah, but on the show, I mean.
Sure. Yeah.
But I think we always wrestle with, when we build content, and fortunately for all of us, you're building so much of this now. How complex do we get? Do we go down that rabbit hole? And is it worth the lift to everybody to do it? And I think, when you can add opportunity and add a different set of trades without that lift, it's really empowering. So, and this is interesting context. We talked about it very granularly on the last segment about the movement between these two products, but you take a look at this and I think when you go back to March of 2020 and you look at that, what the expectations were about divergence and convergence is completely different. It's just unbelievable, the opportunity now. Pair it with simplicity, and you really have something that's pretty cool to trade.
Absolutely. And we're going to get into that uniqueness here at the end of the show, but I just want to show a couple more reasons for getting into this, for taking that extra step into pairs trading. Because for most people, Pete, it's kind of, it's this scenario of, I'll trade technology and I'll trade the stock market, but trading them against each other demands just one more step, but it increases your opportunities. I think this was Wednesday of last week here, where you've got SM75 out of the gate outperforming technology, and then you have it underperforming there within an hour or two. And then by the end of the day, a big divergence here between sticks and SM75 intraday back and forth.
Right.
And by that, I mean, you can look at sticks and SM75 in your platform. You can look at them on a dollar basis or a percentage basis and just say, sticks is up 1% or 50 cents, whatever. And SM75 is flat on the day. It's unchanged. Maybe there's some opportunity in selling one and buying the other there. And then also, there's these huge divergences that we saw. We saw this on, I believe it was maybe Thursday or Friday of last week. Either way, just an example here of huge short-term divergences where last week you saw SM75 making up a lot of ground that it had lost. This is a daily chart, and it looks like
that so
this
right.
here.
I love this, Frank, because you know what, you just from the visual standpoint, you look at these and it's like, well, they're right here. What a great extreme on a very short-term basis. Mm-hmm. Absolutely. You go back to the other one, it's like, well, there's a lot of room for convergence. Absolutely. And that's what we're speaking about is, you know what, your strategies can be built over a number of different time frames. I think doing that is its own form of diversification. And this really speaks to that.
I'm glad that you bring that up, because it's a perfect segue into the fact that you're building a unique opportunity here, because the tech sector and the S&P 500 and the Dow Jones and everybody else, they move enough on their own. But if I'm looking at opportunity intraday, or I'm looking at opportunity for the next week, and I sell the S&P 500, and that's my stock trade. That's my idea on the stock market. And then I go over to NASDAQ and I sell that as well. It's basically the same exact trade. You didn't create a new diversified idea. But what's interesting is you can have your ideas on the stock market at large. And then when you trade these pairs like SM75 versus sticks, look at the performance here of the spread relative to the outright. I went in and I crunched the numbers, and there's on average zero correlation between the pairs and the stock market. Now, that tells you that if you have a short SM75 and a long sticks position, and then you have some overarching investment in any stock market or individual stocks, you shouldn't see those trend together. You should see those being diversified parts of your portfolio. And I'm glad you brought up the timing thing too, Pete, because you see that timing is also another part of this that diversifies you, where you can have, midway through 2020 here, maybe 3 quarters through 2020, I like to see some reversion between these two markets over the next couple of months. So I'm looking at a long-term trade to see these two come back in line. But in the short term, I can also be looking at, wow, SM75 is up 2.5% on sticks today. Maybe I'll look for a little bit reversion just in the short term, and I'll get rid of this trade by the end of the day or by the end of the week. You're adding more unique, diversified opportunities here with pairs trading. And then also the duration, the short term, medium term, long term, that's also adding to all of the potential occurrences that diversifies your portfolio.
Yeah, and you know what, I love the fact that you mentioned that, because the diversification piece is so important. And it's so easy to say, well, you should diversify. I think that's another one, diversification versus the lift involved, and what is true diversification. And I think we're talking about that opportunity here in terms of unique occurrences that at first blush, you think swim in the same pool, but and they do, but afford yourself a different set of opportunities. You want to have opportunities. You just don't want to be bogged down by confusion and complexity. So I think this, this inclination to expand is directly related to the complexity involved in doing it. And I think we've really done a good job of breaking that down here. And this has been this is really a good piece, because it speaks to, long-term, short-term, moving out of the box in terms of just a straight directional strategy. You've painted 6 different opportunities here in what you would think is a binary choice. And that's what we want, is choices.
Yeah, it's just all a matter of adding more tools to that tool belt, because, maybe it starts with your stock picking app or whatever, and you buy some shares of this and then you sell them and whatever. But this is that next step. And thankfully, the small exchange actually makes it really easy for you to add those tools to your tool belt, makes it very easy for you to trade technology against the stock world at large.